So guys, I want to move away from the acquisition, the buying, and a big question we get are, when it comes to lending and finding money for these property deals, where do we go? How do we raise the capital? What does that look like? And today we got Shiraaz Lorgat. So thank you very much for joining us today.
Thank you, Andrew. Good morning to your SAPIN viewers. Good morning to the colleagues as well.
Yeah, thank you very much, man. So I think it's very important. Shiraz, that you just introduce yourself. What do you do? Who is GPF? What do they do? There are some investors on here that have used your services before, but I know for a fact that there are a few individuals on here that haven't heard about yourself and the organization and why you exist, what your mandate is, what do you lend on. So if you can just take us through yourself, your position, and GPF, what do they do and what do they lend on? I think that would be
Yeah,
great.
thanks, Andrew. So we take this opportunity to introduce to the Gauteng Partnership Fund. That's the acronym GPF. Gauteng Partnership Fund. To those that have not heard about us, we were set up in 2002. We are a provincial entity. The Department of Human Settlements is our executive authority, so we are part of government, and that's how we were set up. As you see, the name is Shiraaz Lorgat. I'm the acting chief investment and development officer at the GPF. So what does the GPF do? Just by way of example, which is the best way to explain what the GPF does, we are mezzanine funders. So in a transaction, a property transaction, if you have a property that you want to fund that's going to cost you about 10 million rand, we would provide finance up to 30%. So that means that the mezzanine funding would be to the value of 3 million rand. So that transaction then would be structured with 10% equity, the GPF at 3 million rand, and then we would need to approach a senior funder for the difference. So that, by way of an example, excuse me, by way of an example, is the best way to show exactly what the GPF does. Unfortunately, we do operate currently. We do operate only within the boundaries of Gauteng, but we are looking to expand into the sort of our neighboring provinces. So we would consider applications from our neighboring provinces. But as I said, that in essence is what the GPF does. We do have different programs in which a particular project can be located. So we have what we call the rental program. That's for established developers. We have the Entrepreneur Empowerment Fund. These are for 100% HDI companies that are doing their first project. We have Student Accommodation Fund. So obviously all the student accommodation projects will be located there. And then we also have what we call Kasi for Real, which is a subsector of the Entrepreneur Empowerment Fund, but that deals with all township real estate developments.
Okay, great. And tell me, Shiraz, your ideal client, is it someone that's already experienced? They've got a balance sheet. They've been investing in property for a number of years, or could it be someone that's starting out, that's got a great opportunity and some backing?
So and that's the advantage of dealing with GPF. We are a niche funder, in the sense that we're looking for emerging HDI entrepreneurs. So when we assess a project, we assess the financial viability of the actual project. So we don't expect the entrepreneurs to provide us with audited financial statements. So the decision will be made solely on the project that is presented to the GPF. So from the onset, that project must be financially viable in order for a entrepreneur to secure funding. So that's the advantage of working with the GPF. In addition, because we're part of government, our mandate is to create an enabling environment most of your members that do utilize mezzanine funding will know that the cost of mezzanine funding is generally prime plus 4 to 5 basis points, and then it is short term, 5 to 7 years repayment. But working with the GPF, we price our products at prime minus, and then we give you up to 15-year loan terms. So that enables your cash flow. It creates a positive spin on your cash flow because you have longer loan term, obviously, and the interest rate is concessionary. And what that ultimately does is the weighted average cost of funding. So if you take what your senior funder is going to charge you at a percentage of, say, 60%, what the GPF charges you at 30%. And when you combine that, your weighted average cost of funding is much less if you had just said approached a senior funder and they do 80% or 90% of the funding. So that's one of the great big advantage of dealing with the GPF.
Okay, fantastic. So you're saying if there's an entrepreneur out there, an emerging entrepreneur, first of all, you're talking about your mandate is that it's purely residential, right? But now, what if it's a situation where, Ari was talking about a residential block of
Mm.
flats and there's two or three shops underneath? Is it a no from your side, or could you still
No,
lend
no,
on against
definitely.
that?
We'll look at that because the commercial enhances the cash flow of the residential component. So
Sure,
we will look at deals like that. Yeah, that's not a problem. As long as it's not flipped the other way, when you have 90 or 80% of commercial and 10 or
sure.
20% of residential. Yeah, but we'll definitely consider funding an application as Ari was just talking about.
Exactly. And Shiraz, tell me, is there a minimum in terms of what the deal needs to be? Like, I know there's certain lenders that, it's got to be above the 10 million, above the 5 million. Is there a minimum requirement from your side, from a purchase price point of view?
So we deal with our minimums basically deals with the units, the number of units. So for the Entrepreneur Empowerment Fund, which is what we call the EEPF program and the rental program, we're looking at a minimum of 15 units. So we're not putting a quantum to that. We're saying
Yeah,
15 units. So that could be anything from 5 million, 3 million kind of project we're looking at. In terms of the student accommodation, we're looking at 50 beds. Again, we're not in the sorry for the frog in the throat. Apologies. We're not
no
looking
worries.
to do we're not looking to fund houses that are converted to student accommodation. Our ideally we want to see self-contained 2 and 3 story walk-ups even for student accommodation. So we get
Yeah.
a lot of queries. I have a house very close to a tertiary institution. Can you help me with to convert it to student? There we advise you got to do the rezoning. Make sure the rezoning rest 3 is in place before you do your plans and everything else. So we're not doing conversions of homes into student accommodation. We're talking of 2 and 3 story walk-ups because 50 beds is a minimum that we're looking at.
Okay,
Just
so
to
for,
just to
yeah.
touch on apologies, Warren.
Oh,
So
good.
Andrew. So what we when we do the smaller deals up to 10 million rand, the GPF can fund on their own. So we don't have to apply the traditional model as I explained to you between 10, 30 and 60. So up to 10 million rand project, the GPF can fund on its own. And we would still then require a 10% equity. But anything bigger than 10 million rand, or if your equity is limited, so you can come to us with a 15 million rand project and say, I've got 5 million equity. You do the 10 million. We could do something like that. But if you come
Okay.
with the same project at 15 million and say, no, 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 your 10% means I only need 1.5, but I only have 1.5, then we would structure it in the 10, 30, 60 split, as I mentioned
Sure.
earlier.
So you're saying if it's up to 10 million, you would be able to provide plus minus, of course, 90% of that loan to value.
Yes, yes, yes.
Okay, and the investor brings their
the
10% in
difference.
as the
Yeah.
equity. Okay, that's interesting. I didn't know that. So you're saying for general residential, so if there was a block of flats and it's not student accommodation, a basic block of flats, it could be 2 stories, it could be 3 stories, and there's 15 units in there, and it's 3 million or 4 million. That's right up your alley, right?
Yes, that is. I don't know why the
Well, that's the
video's gone
starting
off.
point. That's the
Yeah,
beginning.
yeah. So again, I just think I need to reinforce the
Yes.
GPF mandate is also the creation of new stock. So we're not in the business to promote change of ownership, merely change of ownership. So the one of the fundamental mandates of the GPF is the creation of new stock. So we're looking to do conversions of office blocks into residential. We're looking at greenfields developments, new developments. We're looking for uninhabited or yeah, buildings that are really run down that will then make them habitable again so that we can then define as the creation of new stock. For mere change of ownership, that is not the GPF mandate. We would then say, unfortunately, a lick of paint is just not going to constitute refurbishment. So we would not be able to support that project.
Okay, no, fantastic. I'm busy making notes. I'm going to send on this chat box. I think it's quite good. But if students' accommodation, we're starting with 50 units, you said, and what you're saying is there's two separate conversations. If we're talking about the sector of student accommodation, you don't want people bringing you assets that are not already zoned, they're not already self-contained. You want them better
Yes.
to say, here's a block of flats. It's already student accommodation. It's 55 units because you're talking about it's going to be 50 units or more. You will then look at that. If that asset's below 10 million, you'd look at up to 90%. But anything above that, you then jump to your 30%. Is that right?
Yeah,
Mezzanine
yeah, yeah,
finance.
yeah, yeah.
Okay.
So ideally, we for student accommodation, we do a lot of greenfields development, because the properties closer to the universities, they take a while to get rezoned. Once the rezoning is in place, then the developers come to us and say, well, now the zoning is in place, the SDP is either going through approval or has been approved, and we have a minimum of 50 beds. This project is 12 million rand. Please assist us. And then we say, fine. Do you have 2 million rand equity? Yes, I do. We'll pick up the 10%, 10 million rand. No, I don't. Then we go revert back to the 10, 30, 60 split.
Absolutely. And Shiraz, tell me the actual loan application process. Let's say someone's got an opportunity right now and it falls within the Gauteng area. Um, is it application through your website? Do they email you personally? What is that process?
It's a dual process. We do have a loan application system, the LAS system, on our website. So you register and then you upload your documents onto the LAS system. And then in addition, you can just email a soft copy to there are contact details for each program on our website. You could then just email the respective contact people in terms of the application. And then we take it through. So initially, when that is received, you will get an acknowledgement of receipt letter. We do a desktop analysis, very much like what the Claude, something like, it was just pointed out in terms of the Claude model, to check to see that is this project financially viable? Just a desktop assessment. If it is, we then do an expression of interest to say, look, we think we would like to support this project. Year our terms, our high level terms. If you accept that, we then appoint an independent due diligence service provider who will go out and do an assessment on the project. We do a valuation on the project. Once that is completed, we do a final costing on the project, just to make sure that we don't have overruns. We build in contingencies, and then that goes through to we have two committees before it goes to the board. So we have a technical committee that looks at it. Then it goes to an executive committee, and then ultimately, finally, to a board for final approval.
Okay, brilliant. And I mean, just I guess from your experience, are we talking 3 months for that to happen? Could that happen within a
Yeah.
month? Is it a typical time gap in between?
Yeah, so typically it's about 3 months. We are unfortunately a government institution, so the wheels may not turn as
Go
quickly as
quickly.
sort of say the standard banks of the world. But yeah, so you have to be patient with us. We take about 3 months. Yes.
No, that's fine. But that's why if somebody does spot the opportunity, so then a question to you, I guess, as they view the property, if they feel like they do want to put an offer to purchase in, could they come to you initially to go, yes, yes, you would lend on it if they do get the deal, or do you only look at the deal if they've got a signed OTP on that property?
They must have been signed an OTP with at least 6 months, availability on that OTP. So that then tells us that there's insufficient time for us to then consider
Yes.
the project. We then also undertake a dual process. So we have a strategic partnership with the National Housing Finance Corporation, NHFC. So, as soon as we receive an application for the 30%, and we've done an expression of interest, we'll take the same application and forward it to NHFC and say, look, we're interested in doing 30%. Are you interested in doing the 60% in this case? That is a facilitative role, so it's not our responsibility ultimately to assure or to ensure that you do get the senior funding, because once we do that, the communication between NHFC is with the developer. If any outstanding documents need to be submitted, they'll deal directly with the developer. But we have a strategic relationship with the NHFC, which says, if we're interested in the project, please consider syndicating with us.
Okay, brilliant. So you said the process is that we just need to do everything through your website. Is there anyone to speak to at GPF if they want to ask any questions, or how would that work
You can, as I said, there are contact
on the
emails for
website?
the respective programs, or else you can just drop me an email, not a problem.
Okay, fantastic. Thank you so much. I have posted your website link on the chat box, guys. So if you have a look at the chat box and if there are any more questions, just let us know for Shiraz or for Ari. I know there was one or two questions for Ari for yourself, so I'll bring up just now. And then Shiraz, from your side, is there anything else you'd like to discuss or explain or educate on this webinar to for our members? Anything else you want to let
So,
them know
so,
or
so
give
we
examples?
before you submit an application, you've got to make sure the zoning's in place. You have a structural report for an existing building. You have a geotech that has been done on a greenfields development, because that all influences the costing of the project. So we want to make sure that the project readiness is there before you submit to the GPF. Yeah.
Absolutely. And I assume that there's a list on your website, right, that says, have you got all this documentation?
Yeah, we do have guidelines as
Um,
well on the website. Yes.
okay, brilliant. No, that's good, eh? Because if they don't have that in place and they put the application forward, it's basically wasting everyone's time, right?
Like
Um,
to and fro, requesting the information.
yes.
Yes.
So making sure you have all your ducks in a row and cross your T's and dot your I's. So guys, what I suggest you all do is that link in the chat box. GPF, have a look at their website, make yourself familiar. It's another option for you guys in terms of lending, whether it's below the 10 million or above it. Get familiar with it, and then we will give you more information as we go through the year. But I think Shiraz, let's ask Ari if Ari does want to come back on. If Ari is still out there,
Yeah.
there we go, Ari. I was just going through a few people that messaged me directly. They're talking about cap rates, and what is the significance of in relation to ROI, and the cap rates. Maybe just for anyone that is new to SAPIN, maybe just go through that.
With pleasure. So essentially the cap rate is the return, the 1 year return on the property in essence. Cap rates are synonymous with yield, capitalization rate. And what the capitalization rate in essence is the required rate of return for a specific investment. And inherent in that is the risk of the property. So again, if you're buying a very risky asset where the tenants are short term or not very well known, or the properties are not in the best area, then therefore you would require a larger return, which in essence would be the cap rate that would be utilized. If the property is in a very safe location, then it would be a much lower cap rate. So the cap rate, in essence, is your net income divided by your selling price is equal to the cap rate or return. Let's just call it return. And in essence, that is the risk associated with the property and the amount that's required in order to make the property acquisition justifiable.
And then also, Harry, in your opinion, I think we're talking about this at the last SAPIN Gold. A property like what you showed us, it is tenanted, it's a clean property. In terms of the investors that you're dealing with, what's an acceptable return on their investment on a property like that versus if that property was vacant?
So the property in this instance would probably I'd value around the 15% mark. I think that's a healthy return for this particular asset, purely because it's very well run, well managed, and it's quite a lucrative investment. In terms of a vacant property, what you need to do in that instance is you would need to assume what your potential rental is, but then you would capitalize it at a much higher rate because there's much greater risk because there's no tenants in place. So this same property that's sitting empty with no cash flow, you would then work out what your potential cash flow is, and then you'd capitalize it at, say, 22% or 23%. And that is, in essence, the cap rate is your litmus test that will determine whether or not the acquisition is viable or not.
Absolutely, yeah. And then members, just so you all know, I'm almost done with our calculator, our portal. And Ari, I need to chat to you about that as well. We need to get the auctioning properties into a portal, but I'll chat to you about that afterwards. And then, yeah, guys, so I think a lot of you need to know how to run the numbers on these deals, and you need to know where the lending is coming from. You don't want to go to an auction, bid on a property, you're successful with the bid to then realize you don't have the finance. Like that can't happen. We need to know what type of investment, residential, commercial, industrial, what bank are we going to, what loan to value are we getting, what does the term length look like, how much equity do you need to bring to the table? Because Ari, maybe that's a good question then. Just very, for the people that haven't bought at an auction, if the hammer goes down and they do hit that reserve price, how much time does a buyer have to actually get the finance in place, and how does that work? And where are they locked in? Where are they not locked in?
So essentially, as the acquisition is as your bid is made, you're required to furnish a 15% deposit on the fall of the hammer. So if you buy a property for 1 million, you have to furnish a 150,000 Rand deposit on the fall of the hammer. The sellers then have a 3-day confirmation period within which to accept or reject. Assuming that they accept the transaction, you need to bear in mind that commission is payable over and above the purchase price. Very important. You need to factor that into the equation, and that number is 10% plus VAT. So when you're making a bid, factor in all the transaction costs. Thereafter, once your deal is accepted, you've got 40 days to furnish guarantees. And again, that's one of the main reasons why you have to have your ducks in a row prior to the auction.
Absolutely, 100%, Ari. And just give us that date for your next auction as well. So people that didn't attend yesterday that do want to attend,
Yep.
what date was it again?
28th of July.
28th. I'm just going to put in the chat box for everyone so they can see it. 28th of July, Auction Inc. Auction Inc. Auction, and anyone can attend our area. It starts at 11 o'clock, if I'm not mistaken.
Correct.
Okay, brilliant. Shiraaz, I've got a question for you. It was around interest rates with NHFRC and yourself, because I think you're talking about, Shiraaz, your interest rates were prime minus, eh?
Yeah.
NHFC, what's their interest
Would
rate, or
be
how does that
prime
work?
plus. You would. I think it's safe to work on prime plus one. As just to, yeah. But again, I mean, I can't talk for them. They would just make the assessment. But if you're doing your preliminary feasibility, it would be safe to work on prime plus one. Yeah.
Okay, and then someone was just asking me, so the example they gave me in a direct message was, so Andrew, if I go buy a block of flats in Joburg CBD and the purchase price is 100 million, and I go
Yeah.
to a traditional bank, be it Absa Standard Bank, they said a traditional bank, and that bank only gave me 60%. What Shiraaz is saying, they would look at mezzanine financing around the 30%, so 30 million, so 60 million from the bank. And the question was, but Andrew, is the bank happy that I get 30% from GPF and then they bring the remainder of the equity? Is there
Yes.
assumption
Yes.
right with that?
Yeah, yeah. Because the GPF will not insist on the first mortgage bond, we know as mezzanine funders we'll take a second mortgage bond. So
Yeah,
generally, the banks are happy to allow us to do a second mortgage bond if we can negotiate an intercreditor between the senior funder and the GPF. All well and good, but we will also assess the sort of risks on the project, mitigate those risks, take cession of certain rental incomes if the banks have not. So we and generally what we want to do is have a meeting between the senior fund and the GPF so that our terms mirrors their terms. There's no sense you having two syndicated loans with completely different terms. We have to make sure that our terms mirror each other. So we definitely we insist on a meeting with the senior funder, finding out exactly what their terms are, and then we structure our funding accordingly so that, as I say, these terms then mirror each other. There's no sense having sort of conflicting terms.
absolutely.
Yeah, yeah,
And then a question on that, and Dave, thanks for your question there. The question was, does NHFC also give a 15-year loan term? Because I think when you
yes.
go to commercial banks in general, some are 10%, some commercial, we've seen up to 20-year loans, majority being 10 to 15-year loans. So yours at GPF, you're saying can go up to 15 years. And then are you
Yes.
saying NHFC also do 15 years?
Yes, they also do 15-year loans.
Okay, so 15 and 15. Okay, fantastic. And then Shiraz, in your experience with other commercial loans, with the traditional banks and other lenders, what are you seeing them giving in terms of interest rates and loan to values and
So
loan terms?
our typical client is the emerging HDI, and we find it difficult to secure finance with your conventional or traditional banks. Them obviously they're looking into the more established ones, and so therefore we have these strategic partnerships with the likes of NHFC. One of you other We have Tough also on board. We do funding with Tough. And then we also look to do funding with NEF, the National Empowerment Fund, as well.
Yeah.
So that's where we typically, for our emerging HDI developers, would seek senior funding from.
Yeah, absolutely. Hey. Okay, no, great. That gives clarity on that. So we've got some good clarity on the auction questions. We've got clarity on NHFC. We've got clarity on your mandate then, Shiraz, which is brilliant, and your loan terms and all of that, and your interest rate. So it answered all those questions that came in because I saw some questions on the general chat box, but also I saw some questions coming directly to me, making sure I've covered them all. And Shiraz, so I think we're getting towards the end of this webinar. Is there anything else you'd like to let us know, or is there any advice you'd like to give our investors on this webinar in terms of jumping into commercial or
I mean,
residential but
just
commercial
yeah, yeah,
loans?
yeah. Just continue to take SAPIN as your mentor. From today's presentation, you can see exactly how we combine sort of the acquisition with the funding, and we can see how we can assist going forward. Thank you.
Absolutely, and thank you very much, Shiraz, for your time. We'll be in touch with you if anyone is interested. I'll put your link on there, and we'll let them know more about your products. Okay, thank you, Shiraz. Brilliant.
Thank you.
Uh,